With recent negative news on the US economy, there have been signs of brighter things to come as US retail sales markedly improved today, up 1.1% in September and higher than originally forecast. Well, FX Strategist Peter Frank of BBVA joins me on the line from London. Peter, we've seen retail sales gain for 3 months in a row now, but the data released today was greater than expected. Is the US economy on the up again?
Definitely looks that way. I mean, this isn't just one data that's come out of the blue. This is one of several linked data that are showing the same type of thing, which is a clear rebound in growth trend. Bear in mind that this is a pretty good retail sales report. No matter how you look at it, slice it or dice it, it's a solid report, even if you strip out some of the erratics, such as, say, the transport sector, which can distort things. Transport's booming, very, very strong, but even if you strip that out, you're still looking at 4.8% year-on-year growth, which is very good. Based on the same time last year, it was on 6.3% year-on-year growth, so there's no negative base effect there. It's a genuine strong growth rate, and it follows from what we had last week, which was evidence of pretty decent consumer confidence gains. And we had previous to that the strength of the payroll, employment growth, and average earnings beginning to creep higher. And of course, we've seen pretty decent export volume growth as well over the last few months. So a lot of the key ducks, if you like, are lining up together to suggest that the US economy is certainly recovering in a broad and meaningful way, and in a way that we've not really seen since the credit crisis of 5 to 6 years ago.
Now, you mentioned in your answer about auto sales in the US. We know auto sales are mostly responsible for this gain, climbing 1.3%. Do you expect it to last at all? Well,
even if you strip out the autos, it's still a strong number. It's still 1.1% even without the autos. Mm-hmm. So yeah, definitely. I think that the growth rates are following in line with the gains that we've seen in employment, the gains in wages. Also, asset prices, such as house prices, are rising quite strongly as well. So that's adding to the upward momentum. So if everything moves together in unison, it's not just a trend, it's a bit of a herd, really, and it's a positive herd, which is something I think that's very much welcome. And I think for the global economy and for risk markets in general, it's positive.
Now, we saw German stocks advance earlier. The yen fell just before the release as well. How has this affected the markets today overall? And do you think the positive data will change market attitudes towards the US dollar in any way?
It's a slow process turning the dollar from what it is now, which is a safe haven currency that benefits mostly from its liquidity, and it benefits more from bad news globally than good news. Now, to turn from that into a pro-cyclical currency is going to take time. And one thing that we do have that slows down that process is obviously the interest rate differentials and the Fed reaction function. Clearly, the Fed has told us when they had delivered the QE3 recently that they're not going to be really looking to hike rates for another 2 to 3 years at the very, very earliest. So if you're looking at that kind of time frame, then you're going to have to see really some pretty astoundingly strong data in a clear long trend before you get the dollar becoming pro-cyclical. However, I would say that process is helped by strong data like this, but certainly in the near term, it's more helpful for helping other currencies, particularly high beta currencies that have been sold significantly in recent weeks on fears about China's slowdown, on fears about the Eurozone crisis. So currencies like Norwegian krone, the Aussie dollar, Kiwi dollar, etc., that have weakened a little bit because of global risk, I think they will benefit more than the dollar. For Eurodollar, it's probably even Stevens, and the initial reaction from the market has been to basically do very little on this number. So we've still got Eurodollar trading just below 130 in a sort of 129, 130 range that we've seen all day. So it's not really had a big impact. And I would think that's a pretty reasonable assumption, to be honest. It's not really something that's going to drive Eurodollar dramatically.
And finally, what challenges does the US economy still have to face, despite the signs Americans still evidently have purchasing power?
Well, obviously we do have competitive export markets. And if we were to see a big rise in the dollar, that would initially crimp some of the growth we've seen in nominal exports. Obviously, the fiscal cliff is something that the press is talking about. It's not something I think that is too onerous as long as you've got decent growth, which they seem to be accruing right now. But that obviously is something that will be a key feature to whoever wins the presidential election that's coming up. And then you've got the global slowdown perhaps coming from the likes of China, although their monetary policy is beginning to bear some fruit already. So I would say we have to be quite cautious about that. But clearly the Eurozone remains the most intractable issue. And with the Eurozone likely to face some kind of recession, technical recession next year in the first couple of quarters, certainly export markets are going to be a little bit tougher in the year ahead for the US than in the past year, which has been very, very supported by, as you said right at the start, the transportation sector.
Okay, thanks for that, Peter. You can get more details on US data here on Dukascopy TV. And don't forget to check back for our hourly updates. Until next time, though, goodbye.